Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 10th, 2025, and we're diving into Arch Capital Group's fourth quarter earnings report for 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Arch Capital Group, a key player in the insurance and reinsurance industry, has just released its Q4 2024 earnings. There's a lot to unpack, from their net income performance to strategic initiatives.
Revenue and profitability overview. Let's start with the financial highlights. Arch Capital reported a net income of $925 million for the quarter. How does this compare to their previous performance?
Arch Capital's net income of $925 million, or $2.42 per share, represents a significant decrease from the $2.3 billion, or $6.12 per share, reported in the same quarter last year. However, their adjusted EPS of 2.26 still shows strong profitability, especially considering the challenging environment with catastrophic events impacting the industry.
And what about their revenue streams?
Net premiums earned increased by 23.9% to $4.143 billion, driven by growth across their insurance and reinsurance segments. Despite the higher combined ratio of 85.0%, which reflects increased loss ratios due to catastrophic events, Arch has managed to maintain solid underwriting income.
Segment performance and strategic initiatives. John, can you break down the performance of Arch's different segments?
Absolutely. The insurance segment saw a 28.4% increase in gross premiums written, largely due to the MCE acquisition. The reinsurance segment also performed well, with a 17.5% increase in net premiums earned. The mortgage segment, despite a 5.4% drop in gross premiums written, reported an 8.6% increase in net premiums thanks to strategic adjustments in their portfolio.
How significant was the MCE acquisition for Arch?
The MCE acquisition has been a key driver of growth, particularly in the insurance segment. It contributed to a substantial increase in net premiums written and helped lower the underwriting expense ratio, showcasing Arch's strategic focus on expanding its market presence and optimizing operational efficiencies.
EPS forecast and analyst expectations. Let's talk about the earnings per share. Analysts had forecasted an EPS of $1.85. How did Arch perform in this regard?
Arch Capital exceeded expectations with an adjusted EPS of $2.26, beating the forecast by 41 cents. This outperformance is a testament to their effective risk management and strategic initiatives despite the challenging market conditions.
What does this mean for investors?
Beating the EPS forecast by such a margin is a positive signal for investors, indicating that Arch is not only resilient, but also capable of delivering strong financial results, even in adverse conditions.
CEO insights and future outlook. What insights did CEO Nicolas Papadopoulo share about the company's performance and future outlook?
CEO Nicolas Papadopoulo highlighted the strong contributions from all earnings sources, despite the elevated catastrophe environment. He emphasized the company's robust performance and expressed confidence in Arch's ability to navigate future challenges, particularly with their strategic initiatives and market positioning.
How is Arch addressing the impact of recent catastrophic events?
Arch has managed the impact of catastrophic events like Hurricanes Milton and Helene through effective risk management and reinsurance strategies. Their ability to maintain profitability in such conditions speaks volumes about their operational resilience and strategic foresight.
Key takeaways. In summary, Arch Capital Group has delivered a strong performance in Q4 2024, with significant growth across its segments and a notable EPS beat. John, any final thoughts on Arch as an investment prospect?
Arch Capital's ability to outperform EPS expectations and maintain strong segment growth, despite challenging conditions, makes it an attractive investment. Their strategic acquisitions and effective risk management position them well for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Arch Capital's performance in the comments below.